All right, let's move on to our second segment of the day, and it's all about the tax. Okay, just now we mentioned about how the tax revenue is being collected by the government so that it can be reinvested to us. But you know what? Targeting those who can afford to pay. The government is reducing individual income by tax by 2 percentage points for those in the taxable income bracket of 35,000 to 100,000 starting this year. In a bid to relieve the burden of rising cost of living faced by the middle, the government has proposed to impose a tax on luxury goods starting this year based on the types of luxury items like watches and fashion products, which is a very good thing to hear, isn't it, Brendan?
It's a bit scary though, but we just have to, take everything in and of course try to make the best use of it. So of course we're talking about tax right now, and we are very happy to introduce to you Keegan Ong, who is a tax partner of PwC Malaysia, but he's not here in the studio. He'll be joined via online application, and of course we're talking to him online. Good morning, Mr. Keegan Ong.
Good morning. Thank you for having me on the show.
All right, how are you, Keegan? I hope you can hear and see us well. We can hear and see you well as well.
Yes, I can.
All right, Keegan. So first up, Keegan, let's talk about it. Let's jump straight into it. It is all about the tax, isn't it?
Yes, exactly.
Can you please shed some light on why taxation is important, Keegan, especially with the revised budget of 2023?
Okay, I think there are a couple of reasons in terms of why tax is important, for the revised budget. Firstly, I think as we all are aware, the revised budget was an expansionary one, where the budget size is even larger than the one that being announced in October, where everyone was expecting, the government should be cutting down the expenses, which is not the case, right? And one thing that I like about the budget, the revised budget, is it was a pragmatic one, and the finance minister has also laid out a targeted approach in terms of how he wants to deal with the various issues that the country is facing. For example, I think he has set the scene, at the beginning of the budget speech to talk about the actual situation of the country. He talked about the slower global economic growth that we are facing, and the country is actually at the recovery phase from pandemic. Our investment level, in terms of FDI and DDI, has not been recovered back to the pre-pandemic levels. Of course, it comes with the rising in cost of living as well. So he then set out the respective strategies in terms of how the government would then address these challenges. And hence, there is a need to have a bigger budget to implement all these initiatives and proposal. Of course, then secondly, as a country, as a Malaysia, as a country, we know that traditionally we rely heavily on taxes as the main source of revenue, right? For 2023, I think the expected number is about 56.5% of the revenue will be from direct and indirect taxes. And that is actually equivalent to about 219 billion. Right? And this number is higher than last year. So, how is the government going to achieve this revenue target? I think he has also introduced a couple of new measures, for example, like the luxury goods tax, the capital gains tax that the government is going to study, and that would then help the country, to get additional revenue in order for them to meet the revised budget.
Yeah, and a few other new taxes as well that came into play, especially when it comes to, which involves, and we don't condone it, vaping, so on and so forth, nicotine, so on and so forth. Those should be taxed as well. Now, of course, when it comes to the 2030 master plan and potential growth, how do we talk about this right now, and what could be expected here when it comes to global uncertainties? Do you think 2030, the master plan, is a little bit, it's considered a far-fetched? How can we actually predict, and what can be expected from here?
Okay, I think that, in the past, if you look at Malaysia, we tend to rely heavily on investment that are capital expenditure, heavy capital expenditure spending, and then the government then incentivize them accordingly. But however, I think in today's environment, in terms of how the businesses runs, how are they being conducted, with the presence of technology, it is timely for the government to look at the master plan to reorganize or to determine what would be the industry focus area as a country moving forward. If you look at the region, competitions are stiff. Our neighboring country like Singapore, Indonesia, and Vietnam, we all are fighting to get investment into the country.
Right.
So, the master plan then, is important for the government to redefine what is the investment parameters, by placing more emphasis on quality, focusing on the multiplying effects in creating high quality jobs, and building the key ecosystems to stimulate the development of the local players. As compared to the past, I think we tend to look at capex investment. So I think this is something that I'm welcome, and hopefully the new industrial master plan can then actually ties in to what the actual economic situations. Yeah.
All right. Now we want to talk about expanding tax on those who can afford it. Obviously, there's a bit about the luxury goods tax, which disable me from buying new handbags, which is very, very unfortunate because I want new handbags, Brandon.
You want your handbags?
I'm kidding,
okay.
Keegan. I wonder because expanding tax on those who can afford it, budget 2023 will be sourced from income tax totaling 39.9% of those total allocation. Is this a fair approach, Keegan?
Okay, because again, if you look at where the revenue from as a country, is always traditionally on direct tax revenue as the main source of income. And we have been talking a lot about bringing back the GST to expand the tax net for the country. I guess it's not the best timing yet, because due to the inflations, the unemployment, those kind of things, it may not be the best timing to look at it. And hence, I think the finance minister during the revised budget has also introduced a couple of tax measures to really collect additional revenue. We talk about the luxury goods tax, capital gains tax on unlisted shares that the government intend to implement. Also, he also increased the personal tax rate for chargeable income that above 100,000. And lastly, he's going to bring back the special voluntary disclosure program as a measure to really to increase the revenue for the country. But I think we talk a lot. I think in the market, people are a bit curious in terms of how the luxury goods tax would affect the general public. In my view, it's more like a consumption tax. If you spend, and then you will then be impacted. And if you look at the other countries, actually, it's not something that it's not a new tax system per se. Quite a lot of countries actually have similar taxes, for example, like Canada, Australia, or even South Korea and Indonesia. But I think what remains to be seen is about the scope of taxations. What kind of items would then subject to luxury goods tax? That is something that we need to watch out, because in those other countries, generally the luxury goods tax would then be applicable to items like private jet, yacht, luxury cars. So I think we need to wait and see what is the detail, right? So that is about the luxury goods tax.
Right, okay. Thank you so much for explaining to us when it comes to the luxury good tax. And unfortunately, Mr. Keegan, we've got lots to talk about, of course, but we don't have time to talk about it. But we thank you so much for you when it comes to sharing your inputs and how we can actually watch out for some of the taxes and how we can actually spend better in so many ways. So thank you so much once again. That's Mr. Keegan Ong. We just spoke about Post-Budget 2023 and why tax matters. Tax partner from PwC Malaysia. Thank you so much, Mr. Keegan, once again.
Thank you. See you.